Oh, so it seems like there are some benefits to being married other than
Mhm.
other than obviously the other benefits. This is a good tax benefit to being
For
married.
sure.
Hi everyone, welcome to my YouTube channel. My name is Reni. On this channel, I do fashion, finance, lifestyle, career, and a bit of everything. Today's video is part 2 of a video that I did a bit earlier, and it's all about finance and taxes, how you manage your personal taxes, what do I need to pay, what can I use to lower my taxes, all these questions that you guys asked. I had them answered. I wasn't able to answer them personally, but I got an expert who is an accountant named Stephanie Williams. I got her to answer these questions for you. And I hope this video really helps you. If you have any other questions or if you want to reach out to Stephanie directly, her information is in the contact box below and you can get those questions answered for you. Okay, so make sure you watch part 1 first, and here is part 2. Let's begin now. And today, as you can see, I have a very special guest, and her name is Stephanie.
Hello.
She is an accountant, and if you watch part 1 of our video, you'll know that she has been giving us a lot of great tips and tricks about filing your personal income taxes and answering all the questions that you had on my Instagram. The video was getting a bit long, so we decided to do a part 2. So this is part 2, and we have lots of great questions. So we can just jump into it. If you want to watch part 1, I suggest doing that first before you start this video. One question that we had was, are there any work from home tax breaks? Because a lot of us with the pandemic, of course, have been working from home. So just want to know, are there any tax breaks that the government is giving us?
Absolutely. So pre-COVID or pre-pandemic, there has always been a work from home tax benefit or credit that could be claimed. However, the eligibility criteria to claim these credits was much harder. The CRA took a look at it and said, okay, they're going to create an easier benefit because so many people are working from home because of the pandemic, and they know that it's going to be a credit that needs to be claimed by many. So they actually created a simple or a simplified way of claiming the home tax credit, working from home tax credit. So that is allowing employees who work from home for 50% of the time during COVID, during the pandemic last year, to claim $2 a day for X number of days that you've actually worked from home to the maximum of $400. So the catch here, or there is no catch, so the catch here is that you actually don't have to keep any receipts. If you're claiming it, as long as you've worked from home for X amount of days, you're absolutely eligible for that tax credit. Okay. There is an alternative, because if you're like me, you're like, okay, $400, I was home for much more, and I know that I spent more money in hydro and water and internet and all of the other jazz. So there is still the ability to claim the detailed tax credit, which is really getting your receipts for all of the eligible expenses, and claiming a proportionate of those receipts based on how the space that you use for your business.
Okay.
So if you think about it, I have a home office, and of the square foot of my home, that percentage that I use, I can claim for the eligible expenses, provided that I get a special form from your employer saying that you're able to work from home.
Okay.
So my ask, or if you're thinking about doing the detailed way, is talk to your employer and ask them about the work from home eligibility form, so that you can have that. You don't have to submit it to the CRA, but at least you'll have it on hand in case that you need to provide it.
Great. And I'm going to be doing that because, yeah, I've saved money from not commuting, but I've also spent a lot of money being at home. Another question that we had was, are there any tips or tricks that you have for filing as a married couple?
Sure. So there are quite a few, actually. The first one I mentioned a little bit about on the first video is tax optimization. So certain tax credits or deductions are available to be claimed by either spouse. And this is an opportunity really to reduce the higher income spouse's taxes payable and allocate some expenses to the lower income spouse, or vice versa. So some examples include medical expenses, donations, childcare expenses, which can be shared and optimized amongst the couple. The second one is income tax splitting, which is shifting income from the higher income spouse to the lower income spouse. The thing here is it has to be done precisely right. So I would recommend getting a advice from an accountant, tax practitioner, to ensure that you're structuring it the way that you're not attributing income back to the higher income spouse. Attributing meaning that the higher income spouse is still not seen in the eyes of the CRA as the one who earned these dollars.
Mhm.
So one way is the higher income spouse making spousal contributions into their spouse's RRSP, and any gains from that, if they put it into an investment, any gains are the income of the lower income spouse, so therefore taxed at a lower rate than it was if the higher income spouse did that. Splitting your pension income. There's an election that allows the higher income spouse to split their pension income and give it to the lower income spouse, which is in a lower tax bracket. And again, drawing up interspousal loans. Very, very particular. The CRA really needs you to be crystal clear on this so that you're not attributing income back to the higher income spouse as well. So these are some mechanisms that you can use where you're really making sure your overall family's tax situation or position is in a better spot than not using these vehicles.
Cool. So it seems like there are some benefits to being married other than other than obviously the other benefits. This is a good tax benefit to being married.
For sure.
Just to build on that, if you are married, do you have to file with your spouse? Is that a legal requirement?
So in Canada, unlike the States, there is no such thing as joint tax filing. There really isn't. What you do have to put in your tax return is your marital status. So saying whether you're married, single, common law, etc. So you are required to file that accurately because you do sign off saying that you've provided accurate information. And you provide the SIN, name, and income of your spouse. So, and really the purpose of that is the CRA identifying and the accountants identifying which tax credits you're eligible for based on all of this information. So there isn't a joint filing, but you do have to provide the information related to your spouse.
So if my spouse is a stay-at-home spouse, do they have to file taxes? Or like how does that work?
Yep. So I recommend all individuals above the age of 18, or if you start working, to file taxes for the other benefits. So even a stay-at-home spouse who may not be making income, there are benefits such as getting your HST tax credit every quarter. If you're in Ontario, accessing the Ontario Trillium benefit, which is paid out every quarter. Tax optimizing with your spouse so that you can share those credits or deductions, as well as accessing the child care benefit. Right? Because you need to have your taxes done in order to access the child tax benefit there.
Another question that we have is, what can I write off on my taxes? So this is for not businesses, but for personal, like on my income tax, for example. What can I write off on my taxes?
Yep. So there are a number of tax deductions or credits that are available, and it really is tailored to what situation or the tax circumstance. So some of the ones that are available, even a new one that came out just this year, is around subscriptions to digital news. So there are very random, yeah. So there is a tax credit for digital news because, of course, the news is taking a hit with all of the media that's out there and the ability to get news in other channels. So there certainly is tax credits available. I would say that for employees, it's much less than an employer or a sole proprietor or incorporated business. But there, some of the eligibility is the personal income benefit. So if you're a working individual or not, the CRA actually allows up to, I believe it's now $13,000, where you can actually get that amount tax free. So everybody automatically gets that benefit. Some of the other benefits is the working income tax benefit, where if you're a working individual in Canada of 18 years of age and you don't meet these other exceptions, therefore you get a tax break or a credit for the fact that you're actually working. Again, there is a cutoff. So if you make over a certain dollar, you no longer are eligible to certain credits and benefits, because it does aim to sort of level the playing field there. So I would say speak to an accountant.
Yeah.
Generally speaking, there are different credits and benefits, but it's based on your individual circumstance and situation.
Okay. And when you speak to an accountant, will they bring all these things up to you, or do you like say, "Oh, I do this"? What?
So I would say the better accountants um, should actually have a process or intake process to probe. So a part of the Serenity accounting and consulting services, which is my business, a part of our sort of onboarding for new tax clients is really going through this questionnaire and finding out and probing about different situations, scenarios to find out whether or not they're eligible for different credits or criteria for different deductions as well. So it really is having that conversation from the onset. And then once the information comes in, following up with sort of certifying or confirming the information or identifying other credits that they're available for.
Okay, great. So it's key to find a good accountant.
Yes, yes. I would say that it would be a red flag if your accountant only takes information, doesn't ask you any questions.
Yeah. Okay, makes sense. Another question that we have is, if I am on a study permit, will I be taxed as a resident or a non-resident? And is there a difference of how residents are taxed and non-residents are taxed?
Good question. Okay, so residents of Canada and deemed residents are taxed on their worldwide income. I mentioned that in part one. Mm-hmm. So if you're on a study permit, the determination is, okay, are you a deemed resident for tax purposes? So even though you're not from an immigration perspective a resident, does the CRA deem you to be a resident? And how that's determined is based on a couple factors. One, have you been here for over 183 days during the tax year? So have you actually stayed in Canada for over 183 days? Mm-hmm. The second point is, do you have significant residential ties to Canada? So what that means is your family here? Do you have a home? Do you have a bank account? Do you have property? Do you have a vehicle? Do you have health insurance? So these are significant ties that make it seem like, even though you're not a true resident in the immigration perspective, you may be a resident for CRA perspective. And although like there's a long laundry list of different areas that can prove whether or not your significant ties exist in Canada, but once that determination is actually done, you will fall whether you're in the resident bracket or deemed resident bracket or non-resident. And the difference between that, if you're deemed resident, you are taxed on worldwide income. If you're not a deemed resident, you're only taxed on your Canadian income.
Okay.
Yeah. So there is a spreadsheet that you can go through to determine where you fall, or you can simply talk to an accountant and go through that exercise in terms of identifying what you would be in the eyes of the CRA.
Okay, that's very good to know. I've been learning so much. I really had no idea about most of these things. So I'm sure lots of people will benefit from this video. So I have two more questions for you. One of the questions is, so a lot of people have, a lot of my followers are recent graduates and they're paying off their OSAP debt. So someone wanted to know, can you please explain the tax credit based on OSAP debt?
Absolutely. So the Canadian government actually provides a tax credit for interest paid on your OSAP loans. So only OSAP loans, not any other loans outside of the government or private loans. And what that means is that you actually get a credit or deduction on your taxes payable for paying off that debt. And the good news here is that if you actually don't need to take that deduction in the current year, perhaps you didn't pay, you didn't have that much income, the benefit wouldn't really be worth it, you're in a refund position, you can actually carry forward that credit for up to 5 years. Oh. So you can wait, compile it until you actually need to take that deduction to put you in a better tax position. So okay. It's pretty cool.
So does that mean that OSAP is essentially a free, interest-free loan?
No. It's not an interest-free loan because the credit is a percentage of the interest paid, so it's not the entire amount that gets deducted.
Okay, Derek. So you mentioned that this is only for OSAP, but I'm wondering if someone is in another province, so if they're in Alberta or BC, are they able to get this tax credit as well?
Yeah, so as long as it is a government student loan, you are able to deduct that interest on that student loan. So it's not only OSAP in Ontario, it's the equivalent to those government student loans across the board.
Okay, good. So the Canadian government's looking out for students, which we love.
Mhm.
One last question that we have for this video is, what is the best way to manage my foreign currency income?
So, for just to clarify, so foreign currency income can be any income by way of capital gains. So that can be if you own a home in the States, for example, and you sell that home and you make some profit on that. That US dollar profit is foreign currency income. Or if you buy investments in Canada, in the European market, that income on your investments, capital gains, is foreign currency income.
Mm-hmm.
So the CRA requires for all of your foreign currency income to be converted to Canadian dollars. So if you want to be your accountant's best friend, tracking is key. um, and even if you're doing your taxes yourself, tracking is key. So really tracking what day did you buy those investments, and you can be using people use Excel or other means. What day did you buy it? How much did you buy it for in that foreign currency? What did you sell it? How much did you sell it for in that foreign currency? Because that is the rate that the CRA requires on those specific days to translate it to Canadian dollars.
Oh, wow. On the specific day. Okay.
Yeah, so we're talking about, this is where we talk about complex tax filings. So where you actually have to do more behind the scenes work to come up with the income for Canadian purposes.
So if my foreign investment, so I invest in American companies quite often through my
Mhm.
TFSA. You said that in the previous video, you said TFSA, I do not have to declare that because it's a tax-free saving or investment vehicle. So
Correct.
if it's in my TFSA, I do not have to, like, that's okay.
You're fine.
Okay, good. Because I was like, I'm missing out. Okay,
But if you're buying stock outright outside of your TFSA where you need to uh, specifically track, or if you have investments in buildings or actual property that is not providing like a T5 slip that shows your income on it as well.
Okay, well, thank you so much, Stephanie. I've
No
learned, as I
problem.
said throughout this video, I've learned quite a bit from you today, and I'm sure all the viewers will be able to learn so much from you. If you guys have questions, make sure that you leave them in the chat box, and then maybe we can get Stephanie to answer them. And Stephanie, if you want to plug yourself one more time for
Awesome.
everyone.
Hello, everybody. You can reach me at Serenity Accounting on Instagram, or you can reach out directly at Serenity at contact@serenityservices.ca.
Thank you so much for being on the channel, Stephanie. I really appreciate you coming on. And everyone look out for our next video, which will be on business taxes. So that will be coming out shortly. So thank you everyone for watching and have a great day. Bye.